Check out the video description for details. It's Tuesday, November 14th, and today we're going to go over the stock purchase for this month, what we've added to the kids' portfolio. Last Thursday, we still had some audio issues. I recorded the show, but the audio was still skipping, so I tweeted out that we'd resolve that and gave a little preview that we bought some Hasbro stock, or that was the idea anyways. Didn't work out that way, so we'll go into what this month's purchase was, and let's pull up the kids' portfolio here, and I'll go into details. GameStop is down 27%. We'll get back to this one. This is kind of important stock in what we purchased. So down 27%. Apple's up 19%. Nintendo is up almost 100%, 93% since we bought it. Good there. AT&T is back to lagging as the deal for Time Warner has gotten held up. So might be another buying opportunity there. We still like AT&T. Disney is bouncing back on news for their streaming and Star Wars. Activision's very healthy at 16%. WWE has been roaring back. For a while, WWE was our biggest lagging stock, around 4 to 7% down. It's up almost 30% now, so good news there. Qualcomm had been down. Buyout rumors from Broadcom's got that up 20%. Collectors bounced back up. Big dividend there. Seagate's still lagging a little, 9%. Coke's up 8%, almost 9%. Hasbro bounced back. It was a little bit higher. It settled out again. So it's still down 4%. We still like Hasbro, though. It was what we were going to buy. Square Enix is up 46%, and we think there's still room to run as they haven't fully rolled out their titles for the Nintendo Switch. So big news still coming from them. Sega dropped back down. Didn't expect a whole lot from them. They've typically been good for us. McDonald's is up 9%, and Foot Locker. Foot Locker's the biggest loser, down 34%. Got a little greedy with the dividend there. Overall, not bad return. 7.3% we've got for the kids. We're up pretty good. Okay, S&P is up like 15%, so probably if you just bought an ETF that tracked that, you'd be better off. So we still have a lot to improve on with the performance here, but shaping up okay. So a disappointing year, positive 7% is good news in my opinion. So last Thursday, we projected a purchase of Hasbro when we were talking about the show, and we were going to put in a bid for that. That show got scrapped because of audio issues. So when I put in my orders for Friday, I put in 3 orders. I put in the most likely order, and then 2 kind of pie-in-the-sky hopes to get something really obscenely cheap, and never hit those. Always get the sure thing pretty much, but that didn't happen this time. So Friday, Hasbro, you could see here, was trading in the 80s, and I was going to scoop some of it up, but it actually had a small pop. So my orders did not go through on Hasbro as it went closer to 90. My other orders that I had put in was one for Activision, which was below 60, and GameStop, which I put at what I thought was obscenely low because it had been trading in the 17s, of $16.80. It actually went down and hit that, and it's gone quite below that, dipping down into the 15s at one point. So Friday, our orders went through with GameStop, which was like I said, I thought was a long shot, getting down around 1680, and it's since dropped even more, down to 1619. So we added to our GameStop position. Not a popular stock right now. Earnings is next Tuesday, so Tuesday's episode is going to be really dedicated to GameStop's earnings. Here is the risk and reward, and where you have to when you're investing, you're going to have days where you're down, and GameStop is down almost 30% for us, but we like this dividend yield, as you can see it behind me, of almost 10% at this point. The price to earnings is under 5, which is ridiculously cheap, and book value is at 22, so it's well below book value. They have positive cash flow to pay off the dividend. All the good main value investing things are true. It's retail, it's beaten down, and people see their model changing to digital downloads. A lot of people didn't like the rental system that they talked about to get people to buy their used games. So earnings are Tuesday. We'll see what happens. It could have a big pop from them. We were expecting it to be flat for the year, not drop as much as it has, and then collect the dividend. But this is where you stick to your guns and stomach it out, or you bail. And we're going to stick to GameStop here and collect the dividend and look for the bounce back as they change to collectibles. But these are the kind of things that you're faced to, people that want to get into investing. Money's literally trickling away as they write the company, and the CEO is stepping down. They're in good hands with their management team. CEO stepping down because cancer, I think it was. So rocky road potentially ahead for GameStop. We'll see on Tuesday. Thursday we'll look at some of the earnings reports on Thursday's show, but our purchase was GameStop. We added some shares, and it's going to be our second or third largest holdings now. Our largest holding is Apple, doing very well. Probably could have scooped up some more Nintendo earlier in the year, but that's been our big winner, almost up 100%. So far so good. Let me know what you think about GameStop or any other stocks that you're buying. Still like the gaming stocks big time. Think plenty of room to run. Xbox, give a review of that Thursday. It's either going to be earnings or Xbox One X review. Got to play with it a little bit, and 4K gaming is pretty fantastic. So thanks for watching. Give us a thumbs up if you enjoyed it. Leave your feedback, stock tips, etc. in the comments. I try and reply to them as many as I can, and subscribe if you haven't already. Get the latest investing news for gamers. Thanks for watching, and we'll see you next episode.